Good morning. It is Thursday, February 23rd. Taking a look at the morning charts, we've got the US dollar index, and just zooming out a little bit, you can see this recent sell-off that we've had. And in overnight trading, we've seen the US dollar in the last about 6 hours, more or less, kind of fall off a cliff here. It's trading back down. It came down to a support level, it's had a little bit of a bounce just recently. But overall, this downward move and this little bearish pattern here, it's starting to roll over and head lower. And it looks as though, I pointed this out yesterday, if we go to the weekly chart of the US dollar index, the weekly chart looks relatively bearish. It's got this very kind of tight mini bear flag where we've had a strong pullback, and now we've got this tight little bear flag here. And the fact that we saw it move up and then quickly sell back down is a sign that there's some sellers in there still, and we could see the US dollar head lower yet. Now overall, the US dollar looks as though it's on in an uptrend. If we were to zoom out a little bit farther, this measured move here of this bear flag brings us down to about the 77 level. So if we do see a breakdown, we're going to see it come down to around the 77, which will fall in line with a pretty key support zone all the way across to some previous pivot levels, and in the middle of this previous congestion here where it came up and down. So from there we could easily see the US dollar continue to climb, but again, this is a weekly chart. We still could see 1 or 2 or 3 weeks of a sideways or weaker dollar, which could allow the stock market to continue to move higher, and along with commodities. So we got to keep that in mind. Now, taking a look at what's going on with crude oil this morning. Here is the 4-hour crude oil chart. Of course, we've seen this nice extension here. We have broken a couple previous highs. I'm really looking for a pullback. It is having these nice little bull flags, and it continues to work its way up, trading at 106.35 right now. Overall, those are little pauses and consolidations, and it looks as though it wants to keep grinding higher. Overall, what I'm looking for is some type of pullback that is actually going to, if I pierce some lows and shake the market out. So more or less, we're looking for a pullback that is actually going to trigger a couple of these lows, possibly fill this gap. And this here was a great big run to the upside. I wouldn't mind seeing it come down, break that stop, and settle down into around the 103, 104 area, which is where this kind of breakout occurred. And of course, it'll fill that gap and it'll flush the market out and cleanse it for another move higher going forward. So that's what I'm looking for crude oil. Really, after an extended run this far, there is always a greater chance that you could get a very sharp pullback, and so that's why I want to look for a pullback and to run a couple of these pivot lows and trigger some stops, and that takes some of the risk out of the market. So if it does continue to fall, you're not going to catch one that's got several pivot lows that is just going to tank all the way down. You're going to actually get in after it's already eliminated a good chunk of the risk. Now, looking at gold and silver, we've had a little bit of a weakness in the dollar this morning. Looking at gold, it's started to pick up momentum here, which I pointed out a couple days ago, and you can see it's putting this rounding bottom. Now we're getting these nice little bull flags and some good little volume behind it. Overall, yesterday we broke out of a couple, I'll just zoom out a little bit, out of a couple little resistance levels. We broke this previous high back here, which is a pretty key. More or less, I see it as being like a little cup and handle. So we're starting to break out of that, and we've broken above this previous pivot high. The next key level is going to be this one here around the 1800, 1805 area. If it can break through that, then we'll have a really nice clean break, and I wouldn't be surprised if we see it go around to the it'll head up towards these previous highs. Likely 1880 to 1920 would be a spot where it's probably going to run into some pretty heavy resistance, could pull back, could chop sideways for a while, and more or less it could put in a very large kind of pattern here and eventually build a base up here and eat through this resistance and then explode to the upside. So that's kind of what we're looking for in gold going forward. Looking at silver. Silver has still got a little bit of work to do. It still has yet to break a real key resistance trend line here. It's getting close, and if we just zoom in, you can see we've had nice little moves up, and we've broken this previous pivot high here yesterday and this morning. Overall, it hasn't really it's broken some of these previous pivots like it has in gold, but again, it hasn't broken the major down trend line. And I don't really want to get too involved in silver just yet. I'd like to see it break out of that big downtrend. And once we see both gold and silver that have broken through, I'll be looking for a setup in silver. I don't need to add any precious metals to the portfolio right now, just waiting for confirmation that they're both breaking out and on a move, and that the US dollar is going to head down, and then we'll be looking to add possibly more and get into silver. Now looking over at the volatility index, actually I'll pull up the daily chart of the SP 500, kind of show you what possibly where we possibly could be. Overall, if you were to look back here in time, we had this choppy market, and then we had this never-ending kind of grind that came up, and it broke this previous pivot high, and then we got a nice pullback, and then it did the same thing again. It extended, and then we got a topping pattern, and then we had a big sell-off, and then we got into this more or less sideways chop here, and last year, and it started to grab some traction. It started to head up. Now what I'm seeing here is more or less this run that we've seen here is more or less trying to break this pivot high, which is very similar to this run that we were seeing right here, and about the same distance, and we're trying to break this previous high. So the market does look like it's ready for some type of pullback, but overall, if we do get a pullback, it will form a mini a bull flag, and bull flags are usually the halfway mark, and there is potential for a very extended run again, just like what we saw back in 2010, moving sharply higher for several months. And of course, it's going into election year, so there is a good chance that the market will continue to go higher. After that, we could see the market do similar to what it did in 2011, which is put in a topping pattern that plays out for a while going forward, or we could see the market really top fairly quickly and roll over and head sharply lower. So that's kind of where we stand, and the market, you can see, is very vulnerable to a pullback. It's just continued to grind its way up, and I wouldn't be surprised if we do get a pullback soon, but we got to be keep in mind that the US dollar weekly chart is a very powerful chart, and if it actually continues to roll over and continues to give us weakness, we're going to see the stock market continue to grind higher for several more weeks and possibly even longer. So that's what we've got to just kind of keep in mind, and not get too bearish. Although the market looks very toppy here, it's tough to really fight the trend. You don't really want to do that, and until we get the market internals really rolling over, which they're starting to top here, but really they're forming a similar top to what we saw over here, and we'll see how that kind of plays out going forward. But overall, there is still a good chance that the market could continue to just march higher and higher and higher and leave a lot of people behind. Looking at the volatility index, this is also another chart that this is zoomed back all the way to 2010, and more or less it feels as though we are somewhere right here right now, where you've got this nice move. We went from a panic sell-off and finally came down, stabilized. We've had a little bit of a hiccup. We had the same thing last year, and it's come down. We're having a little bit of a hiccup here. You can see how much longer the market can continue to grind. More or less, this here was the extended second run in the market back in 2010, and that's kind of where we could potentially still be going right now. We could see this market really continue to go higher for some time, and then eventually you'll get into volatility. You'll start to pick up, and you'll start to see the market put in a top, and then from there we would see another one of these big spikes and sell off going into year end or starting January next year. So that's kind of what I'm seeing on the big picture right now, and we'll see how that plays out going forward. Now zooming into the shorter time frame of the stock market, where we stand for that. This is a 2-day chart. This is a futures chart, so this was yesterday's regular trading hours, which is when the majority of the volume is traded. This here was the previous session, and you can see the overall trend has been down. Lower highs, lower lows going all the way through. Yesterday I started to notice the market was starting to look a little bit like it was wanting to put in a bottom, and more or less in overnight trading we saw the market kind of trade flat, and this morning we actually saw a pretty good jump in equities prices. It broke a a previous high, another previous high. Has yet to break this kind of this other pivot high up here. But again, these ones here are the two major ones because they traded during regular trading hours, which is when the majority of the volume is traded, so they carry more weight. The fact that we've broken a couple pivot highs and we've pulled back, we might see a little bit of a washout this morning, and it could actually set up for a long entry to go long in the market. Now, if I just zoom out here, the past couple trading sessions, although we've only had two trading sessions since Friday of regular trading hours, we still had 19th, 21st, 19th and 20th actually in here. Let me just zoom in a little bit more. Doesn't want to stretch it in there. Either way, we've had Sunday, Monday, Tuesday, Wednesday. We've had four trading sessions where the market has literally just worked its way down from the Greece news. We have filled this big gap here that was put in place, and we've really had a nice controlled pullback. And to me, in my opinion, it feels as though the market is trying to round and start to move higher. Now, if we just look at the SP 500 10-minute chart of regular trading hours, you can see we had that nice move to the upside last week, and really we've only seen a couple two trading sessions really pull back this week, or three trading sessions, but overall it's pulled back down and it's working its way down into a support zone, which is more or less into these tops. So if we get a little bit more of a pullback and we get some panic selling in the market, or we see things firm up today, we may be looking for an actual long entry to go back into the SP 500 with a small position. I don't want to take on any big risk here, but overall I do feel as though it could still continue to march higher. And just looking at the overall trend, you can see it's just had a nice pause here and it's pulled back in and settling into the top of these previous highs, and it could easily just continue to extend its grind higher. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.